The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. Can you all see my screen and hear me? Somebody could just type in yes. All right, perfect. Let's go ahead and get started. I wanted to start off by looking at the RSP. We've looked at this a lot before. I don't know if Garrett shows you guys also, but it's one of the indexes that we really like to look at. It's the equal weight version of the S&P. And I think it's a really good indication of the market as a whole, because it smooths out some of the skew that you get from a couple of very, very overweight names in the S&P, and particularly in the Nasdaq, that also show up in the S&P. So we really think that this gives you a very good idea of where we are in the broad market. And for most things in the broad market, whether you count a B wave high here and count this as the primary wave 3 top, the March 2020 low or somewhere in that general vicinity is a primary wave 4 bottom, and most things are well on their way inside a primary wave 5 heading up to new all-time highs or even further all-time highs from what we have so far. And lots of those things that we follow, particularly the things that are larger cap names and indexes and ETFs that are in a primary wave 5, are further along in that move. They still have plenty of upside, but they are further along. Some of the stock waves names that we follow, where instead of a primary wave 5, where those things could be primary wave 3, some of those things could still be further back here where they look like a 1-2, 1-2, or maybe adding a further wave, smaller wave 1 inside that larger third of the primary wave move. But most things, I think, count better as being further along. And I think that the RSP chart is really indicative of that, even if when we look at some things like, and we'll come back to the RSP in just a second, but if we look at something like the Nasdaq chart itself, let me go to the daily here, off of the March 2020 low, there's really nothing in here other than this tiny little drop down here that can really count as a larger degree wave 2 inside this move. So technically it is possible to get 5 waves up here, and this tiny little move here is a wave 2, and this is starting a third, which would get massive extension in the Nasdaq well past the 21,000 region. But there's just not a lot that is very reliable other than some small caps that really support that. So for most things, particularly a lot of larger techs, those also seem to count further along. One of the concerns that Garrett and I do have in a number of some bigger techs companies is that this is still part of a larger fourth wave here, and we're going to get maybe new highs as a higher B wave, but then come down as a wider expanded flat. And maybe that's a running flat, so maybe it never breaks the more recent March low, but there are a number of charts that we're following in stock waves that look like they are heading up more in a B wave in what's going to be a larger fourth wave still, before heading up to new highs in the primary wave 5. But let's go back to the RSP. And there was a question here. It says, Fred says, a few weeks ago you mentioned you would give a basic overview. Maybe we'll try and I can give a quick tutorial on some fans, because I have a fan. Usually the fans that I use are at larger degrees and go a lot further back in time. So most of the time here, I'll have the primary degree move off of 2009. That wave 1 will get a fan, and then those fans, give you some channels for some moves within a certain degree. So you can see that most of, after the 1-2, 1-2, 1-2, most of this third wave, was in between this fan line is resistance and bounced off, this fan is support. And then once that broke, it came down and dropped into the next channel, and then that worked out. So that's kind of the best way that I've found to use those fan lines as potential channels that have some relationship to Fibonacci extensions and price levels, but also through time. But after a while, they kind of lose their relevance, but I think this is going to continue to act as a channel, or at least as some resistance on our way up towards those higher levels for the RSP here. And then I added a smaller degree from just this intermediate degree, wave 1. So we're back to looking at the RSP in a little bit more detail. Again, it looked like a really good 5 waves up off of the March 2020 low, and have a corrective retrace that was larger than the retraces that we got in the S&P itself, and certainly larger than the one in the Nasdaq, into a later June low, and then a wider flat here, or a 5-wave move up, and then a wider flat for the subwave 1 and 2. And then, as we said, we're much further along inside this intermediate degree, that's the parentheses, wave 3. And so we have a really good target here of the 1382 region for that parentheses wave 3. And then we know that our intermediate or minor degree should head close to the 100% extension first, and then consolidate in a 4, and then head up towards that 187 level. So that's where we find ourselves now, is in the minute degree. That's the circle lowercase Roman numeral 5 of that minor degree wave 3 that's targeting this 163 to 165 region, which was the 100% of the parentheses wave 3. And that's off of the earlier March low. And inside that move that we can isolate right here, we're going to zoom in just a little bit more so we get it all on the same page and can see that in a little bit more detail. So this circle wave 5 here, we know should divide into 5 waves. And we have our first 1, 2, 3, 4, 5 waves up off of that earlier March low, and then a corrective retrace that came right to the 618 retrace. And then we're starting that parentheses lowercase Roman numeral wave 3 inside the circle lowercase Roman numeral 5 of that wave 3. And we can see that our Fibonacci pinball, normal Fibonacci pinball inside that move, puts us right on track to head up towards that 161, 163, maybe stretching up towards 165 to top that move off ideally into early June. Could stretch a little bit further, but it does look like we are trying to hold a 1-2 here. So this meat of the move should be about ready to happen pretty quickly. Maybe we can chop around for a few more days in more of a smaller degree wave 2 inside the start of this parentheses 3. But once we push over the 143 region, we really should be on our way up towards 148, maybe even stretching to 151 as the wave 3 of this parentheses 3 of the circle wave 5. So what's unique is, what I think is really kind of cool to look at when we jump over and switch to some of the other index charts, is that even if you're going to call some of these lows still wave 2s, or more significant wave 2 lows, and we're not quite as far along inside this 3, the structure off of the earlier March low is the same. We still have 5 waves up and 3 waves back, and that sets up a move, normal fib structures targeting this region. But if you're looking at this as another 1-2 inside something more bullish in the S&P maybe, you still have, this is kind of the minimum expectation. If it's further back in the count and getting ready to start the heart of the larger third instead of just the fifth of this third, then this should get more extension than what we're looking at here. And then we jump over and we can look at the Nasdaq. We talked about the Nasdaq possibly being a larger 4th wave. My preference, though, is that this is another 5th wave extension, or a 5th wave extension of the 5th wave for a larger version of this wave 3, and that's similar to what we looked at in the RSP, that we have 5 waves up off of the earlier March low, a clear ABC retrace into a 618 fib retrace level, and a nice move off that low that should be starting the third of that move up. If this is an even larger version of this 4th, which would be that purple count that we had talked about. We can add that over here as a purple wave 4. Ideally, we are heading up at least towards this region as that higher B wave than what we got, because this really looks like 5 waves up. So that should not be all of a B wave. So even if we are going to get more of a purple 4th wave, this recent low in the 12,600 region should hold for a move up towards 13.7s as our larger B wave. Then we're going to look at the Russell to get yet another perspective, and I think the Russell counts most similar to the RSP, and it's one of the other index charts that Garrett and I were looking at back here as having potential to outpace a lot of things in the market, and where a lot of the strong gains were going to come over the last year from March 2020, but also very clearly looked like 5 waves up. I'm counting this as a wider expanded running flat into the September low for the wave 2, and then but from there find ourselves in the same spot as the RSP chart. We're at that circle lowercase Roman numeral 5 of the minor degree wave 3, targeting the 2600 region, and then another 4th and then a 5th wave up towards the 3125 in the Russell to complete that intermediate degree wave 3. The structure in the Russell, we were looking for, it was the first clue that we were going to get a deep retrace was that this looked more like an ABC move up off of the circle wave 4 back here. So that had me on alert looking for a retrace down into the 2250 to 2200 region, maybe down a little bit deeper than that. This extension was more extreme than was ideal for, we knew that we were going to expect a final 5th wave down, but we were hoping because we had gotten to the normal retrace region that we had expected for our wave 2, the parentheses wave 2 to hold, that we were only going to get a nominal new low here, and that extended down. So the alternate count that I put out is that this was an awkward, at this point it needs to be a WXY because really we've gone too high to consider a 4th of this orange count. But instead of the 1-2 of an ending diagonal, this can be a wider version of this circle wave 4, where we have an A, B, or actually a W, X, and then a Y wave down. And this can actually be the start of a new impulse instead of being inside of a diagonal. And that's going to be important to consider when we go to look at the S&P and the ES charts, because there is potential for them to be in a similar diagonal to the Russell. But if this was an alternate bottom for that circle wave 4, then they could just take off and finish out the rest of this pattern as an impulse up towards our 2600 target region, and don't have to have such deep retraces for a B wave and a 4th wave in a diagonal. All right, so on that note, well, let's take a quick look while we're on this index charts tab at the Dow, which I have the Dow more in the heart of the move, and you could even still consider this another 1-2. But at some point you have to convert and say that you're in further along in the move. And I think the pivot for that was when we crossed over this 32,900 region. And so instead of counting this as another wave 2, I'm counting this as a small degree wave 4 inside the parentheses 3 of the circle wave 3 of the minor degree wave 3 of the intermediate 3 that started back here in the October low in the Dow. So if we zoom out just a little bit, we see that there's still a lot of upside towards our target region, and I'm only targeting a pretty conservative 100% extension for this intermediate degree wave 3. Normal fib extension would take it all the way up here to just past 50,000. But I'm trying to stay a little bit more conservative, but especially if this is yet another 1-2 inside this move, then it's going to push all of these targets easily up closer to that 48,000 region. So we have a lot of bullish charts from the Dow. A lot of stuff has plenty of room to run that we like a lot. All right, let's go to the S&P, and then we'll take a quick look at the ES. So the only difference really between my count on the S&P and the RSP chart that we were looking at a minute ago is that they're based on fibs. It's a little bit more possible to count the move that we got here. Instead of being this gray circle wave 4, it was still 1 degree smaller inside the gray circle wave 3. So instead of gray, I have that here, and I'll make it a little bit brighter so that you guys can see. But I'm trying to the reason why I fade some things out is on my chart, sometimes I'll fade out a count when it's no longer an applicable count, and just showing it to show context still there from what we were looking at before. And sometimes it's just I'm trying to de-emphasize the specificity of that degree of subwave and trying to get people to focus more on the larger degree, which is the case in the S&P. You know, that we've been trying to focus more so on the fact that we're in this larger third of the larger primary wave 5, and that the specifics of the degree as far as subwave are a little bit murky and also not as important because it really doesn't matter with the structure that we have off the earlier March low. It doesn't really matter if this is a parentheses 1, 2 of the circle wave 5 of the gray 3 heading up sooner into probably this still stretches out into more towards the beginning of June. Although it's trying to launch a little bit faster. So it doesn't really matter if it is the circle gray 3, and this is the parentheses 1, 2 of that, or if this is a little bit of a smaller fifth wave for a larger version of just the circle wave 3, and then we get another fourth, and then a fifth wave up that pushes higher. Yes, the actual ultimate target for this is higher than the ultimate target for this move, but the structure here to get up to there, you know, that 4,300 region is our next target region. And the way that we get up there is going to determine whether we're looking for a smaller fourth and then another push higher towards the 4,500s or 4,600 region, or if it looks more like we're completing the green 3 here and getting another deeper fourth wave back towards the 3,900 region and then heading up again. In which case this is, you know, some things that are on my chart, I try to show a good idea of timing. Other times I'm trying to squeeze everything in on a chart that shows as much detail as possible, but give you guys a good idea of what the structure should look like. You know, if this move up to here takes, you know, another month and a half, the larger degree fifth wave should probably take more like 2 or 3 months. So, you know, this move could easily take into June to head up to here. You know, this fifth could be a little bit quicker, but then we spend more time in another 4, and then this move stretches out. So more concerned about price levels than about specific timing. Zooming in a little bit more on the structure here, the blue is one of the color codes that I use that kind of implies the potential for a diagonal. So in this blue count, we can count this as an ABC move, similar to what we're looking at in the Russell. We held a much higher retrace. We held a 50% retrace. Whichever 1, 2 you're looking at, it's the same move up that could be 1, 2, 3, 4 in a stretched out fifth, and then an ABC move into the 50%, or could count this as an A, B, and then kind of a muted C wave in the blue count. The only difference here is that if this is the gray, if it's this gray third, then we can count this as 5 waves up and allow for another smaller degree wave 2, similar to that green 2 that we're looking at in the Russell, inside the start of this gray count. And that if we're in the blue diagonal is ideally going to be an ABC like this. And if that's the case, we can maybe get a B wave and then a C wave up of this A and then the B and the C. But it should be a little bit more of a choppy move. Not only are you going to get that jog in the middle as the B wave here and could get a retrace back down to the 3930 region, maybe as a smaller degree B wave inside that micro A first. But also your fourth wave in a diagonal is usually going to be deeper. It doesn't always have to overlap with the top of wave one, but that is something that is allowed in a diagonal that's not allowed at all in an impulse. So as far as coming up with the timing, I try to use those larger degree fib fans, and then I try to just spread things out, keeping kind of a general slope and feel to the rest of the subwave structure that we've had so far. Sometimes when I zoom in on something looks perfectly spaced and spread out on a smaller time frame, but then when I go to a larger degree chart, it might look a little bit too compressed, so then I'll try and stretch those things out. Also, sometimes when I change between a daily chart and less than a daily chart, sometimes the justification and spacing at the bottom gets a little bit off, and so I need to refresh that. So, as a general rule, Elliott wave is really not geared to specific timing. It is much more in tune with very specific price levels, and the timing is more of an estimate that gives you kind of that ebb and flow in wave structure that we anticipate. So that's the S&P. It can fit both ways as the diagonal in blue that matches the potential in Russell, or as an impulse that matches more in line with the Nasdaq or with the RSP. The unique situation, for the most part, the cash S&P and the ES mini futures are usually very, very similar. I mean, there's usually very little difference between those charts. There is a potential difference at the moment. I should probably drop this down so it's the same degree as the blue. There is a more of a difference at the moment with the structure that we have seen so far in off the low in the ES mini futures looks a lot more like the Russell as a diagonal than what we saw in the SPX, where it can easily count as 5 waves up also. So Garrett and I, in our ES charts, which do trade different hours, and so it's possible to get subwave structure that ends up being very different from the look of the S&P because of some of the pops and drops that you can get in outside of regular trading hours. Ideally, we don't even get more of that B wave retrace. It's possible that this was an extension of that sub-micro A, and we do get that drop towards the 3930, 3920 region as a parentheses B. But it is possible at the smaller degree to already count this as a wave 1 inside the C wave of that micro A already. So, any clear corrective retrace that's holding support, I'm looking at those as scalp opportunities to head to the long side. And then once we, maybe once we have a very clear ABC move up into the normal resistance region for this possible A, maybe I'll short a little bit here as a hedge for a lot of my longs. But most of this is looking very, very constructive off of the lows that we saw last week, and should certainly continue to the upside in our third wave, whether that ends up being an impulse or whether it fills out more as the ending diagonal. We're going to be on the lookout for both of those. If it starts to accelerate past this 40-50 region as resistance and heads more to 4100 or 4160, then it might have morphed into that impulse, and then we're just looking for a smaller fourth and a fifth wave up, and then another smaller fourth and a fifth wave up. And also, the potential for that larger move as this wave 3 that should minimally target the 4460 region is also possible. So that's, again, the difference that we're looking at, where either this was that circle wave 4 and we're heading up now towards the circle wave 3 target, and this is going to get a little bit more extension, and it needs to be an impulse to do that, to get closer to the 4430 region, which is our minimum target for the 3 of parentheses wave 3, or we're still 1 degree smaller than that, and we're getting a move up, which could be an impulse or could be this more muted diagonal, only to about the 4100 region, 4150, and then get another fourth wave before heading up towards that 4430 region. Brad says, have we entered the heart of the third wave? So I think what I've been talking about is Garrett and I are seeing most of the indexes and the sector ETFs as being in a fifth wave, in some degree fifth wave of those thirds. So we are in the heart of the move, but we're further along inside the heart of the move, where there's going to be lots of rotation opportunity for more fourth waves before we get to, the third here is going to be a very nice massive move that I think we're starting. Relative to the move off of the earlier March low, this is going to be a larger, longer swing. And then we're going to have another opportunity to do that again, and yet another opportunity for an even longer term move that'll be more similar to the moves that we got off of the June lows and off of the October lows, sometime later this year or next year, as that minor degree wave 5 of 3. And then we also have the whole parentheses wave 5 that we get to enjoy, and that's probably going to be a year or two down the road once we hold the fourth wave consolidation here. The problem is, I don't think that there's a part where you can really set things on autopilot, and there might be some individual charts that look like they're just now embarking on the start of that larger third, but for the most part there's going to be more ups and downs that we need to be on the lookout for, and so each of these moves are very, very tradable. And if you're holding a long portfolio of stocks from stock waves and then using, the ebb and flow potential to hedge that and magnify those gains by your index trades, you should be doing just fine. Richard says, you mentioned shorting the 4 for a hedge, but that you can't use timing on the EW charts. Oh, you're talking about using option. A lot of the hedging that I do is I just trade the actual futures as a short. It's a lot easier to calculate deltas, so I can see how much of my portfolio I want to hedge for, potential, micro B wave that could be, 1.5% to 2% drawdown in the market as a whole. And so I look and see, how that might affect my portfolio. I'm probably going to be trimming some shorter term stuff in my portfolio, but then looking for, an index futures hedge. But yeah, I usually, if I do use options, I'm notoriously will buy a lot more time than I need to give it that much of a buffer, because I would much rather sell back extra time than have not bought enough. For a long-term investor, stops are difficult. Is there a line in the sand that would be support on the Nasdaq and S&P to watch? Certainly at this point, the recent March low is very important, but the low before that, the earlier March low, is even more important. It is possible that we drop down in, at this point, it is certainly possible that we're getting just a nominal extension as another third, but the structure here is really looks like a 1-2 in the start of a third. So we shouldn't be getting just a nominal new high and then dropping back down into the 3700s. So I think the more recent low really should be treated as a more significant level, where if that does break, we're probably at least testing the 3700 region at that point. The structure off of that is should be far more constructive, where if any retrace were to fail to hold the 3890s and then break that March 25th low at this point, I don't think it would be very constructive for immediate upside to recover without it filling out more of a fourth wave consolidation at that point. There are a couple of services at EWT that deal with trading ES futures. Ricky does one, but his approach is a little bit different than an Elliott wave approach, but he is a very successful ES trader. So there are, you could certainly look at the context of the ES charts that are posted in Market Pinball Wizard or in the regular market section of EWT, and then use some of his momentum trading to trade within the context of that Elliott wave chart. And a lot of the ways that Jason and Mike G and Garrett and I and Avi post our Elliott wave analysis makes for very tradable setups. All right, let's shift gears a little bit now that we talked about the indexes, and let's talk about, wait, hold on. Michael says a retrace here to the low 3900s in the S&P as if one lightened up today. Yeah, so if this is kind of a messy 5 up in the ES, if this is an impulse instead of the diagonal, or even if it's the diagonal, this could be the A wave, and we could get a corrective consolidation back. Ideal support for that consolidation, any consolidation from here, would be about the 3920s. Deeper than that would still be valid at about the 3900 level. Below the 3900 level is where things start to get heavy, and it puts it in jeopardy of breaking the 3840s, which were the low from last week. But don't need to get this retrace right now. Certainly is possible to hold the 3940 region and then break over. If we hold that and then push any move over 3980s, should be on its way to 4050 pretty quickly. All right, let's take a look at TLT, and then we'll take a look at the metals and the miners. So TLT, we had a potential for this to be all of the larger B wave back here in March, and the potential for a very bullish, impulsive move up and a 3-wave retrace, and then the start of a very big move to the upside, which if this was all of an A and this was all of a B, then this could have been the parentheses 1 and parentheses 2, and then working on the start of that 3. But we set a resistance line here as this was starting to look like maybe a leading diagonal, and wanted to see it hold a corrective retrace of that and then turn up and take out that resistance. And when it started to leak lower from here, we went ahead and added that as a potential B wave, and then we're looking for this orange count in TLT heading as a wider primary B wave heading down towards the 134 region, maybe 132. And so that's been filling out. Initially, it started as an ending diagonal. I think it still is an ending diagonal, is the way that it counts best. But we did have to shift because we got a lot of extension in what was the end of what should have been our 3rd wave bottoming back here. We got some serious extension, which did put it into the target region for all of that parentheses C of a B wave. We're at a 618 retrace. We're at a 100% extension for that C wave, but we don't have 5 waves down. So ideally, we want to see a 4th wave bounce, which could be a pretty high 4th wave bounce, given that this is a diagonal. That could be all the way close to the 146s. And then from there, it can get either just a nominal new low, or maybe it's going to stretch at that point down towards 124. But if this is not all of the B wave, then we, even if it's not all of the B wave, we should at least be trying to hold this 133.70s and getting a more substantial bounce in the longer duration Treasury bonds. All right, let's jump over here to take a look at gold now. Oh, actually, before we look at gold, let's go back to that index charts and we'll take a look at oil. So far, I'm not convinced that we completed all of a very, very shallow 4th wave in oil. I do think oil looks very similar to me to the Nasdaq chart, where off of the March low, it was not as clean, but we had a sharp 1-2 and then a 3-4, and then we're in the larger 4th wave of a 5-wave move up off of that March 2020 low. So it does look like we've started what could be a sideways move, or maybe it's going to be an expanded flat. So it still ends up holding very, very high and shallow as far as a 4th wave is concerned, as far as a standard 4th wave is concerned. But maybe we do head up sooner as a higher B wave inside that move. We only have 3 waves up off the low so far, but that could be, maybe that's even just a smaller AB inside of this. So maybe this corrects through time more so than price. That would really be my ideal. So this would be an AB setup. Maybe this B wave gets a little bit deeper here. We get a B wave that stretches up closer to the 70 to 73 region, and then hold not too deep under the 50 region as that 4th. The other alternative is that this was a smaller 4th wave, and we're going to get one more extension to top out this same 3 over here, but then would be starting the 4th wave again and have at least a few moves down that was similar to this. This did put a lot of pressure on some of our energy name stocks, but a lot of those energy stocks are further behind inside the heart of this larger 3 up still. So they should get a nice 5th wave up of a 3rd, hold another 4th, and then get another 5th wave up in line. And maybe that can happen in line with more of this B wave bounce, or perhaps this blue extension towards the 80-81 region for this parentheses wave 3 to top there. All right, another question from Linda. Indexes, IWM, SPY, QQQ, DIA. Should the emphasis be on entering in layers at this point, or caution? I mean, with anything, you have to look at where support is. So I don't know what your risk reward is and where, what your tolerances for retraces are. But, if you're entering any position in the NASDAQ, whether you're using QQQs or whether you're using NQ futures or whatever it is, your support is this 12.6 low. So it can fade. This could be maybe 5 waves up as wave 1, and you could get a fade down to the 12.8 region. So if you're going to enter here, if you want to have exposure because maybe it doesn't get that fade, then you need to make sure that you can tolerate a retrace down to at least the 12.8 region, and that if your stop is going to be under this low, that you can tolerate, so you're sizing accordingly. And then as that confirms and maybe it does get the retrace, then on a retrace, maybe you add a little bit more, still with a stop down here at 12.6. And then after a retrace, if it then starts to move up strongly and breaks over whatever top that it makes right here, then you can add more on the breakout using whatever low that it holds in this 12.8 region, ideally. But there's lots and lots of different ways to enter positions and styles of trading, and what works well for one person might not work well for another person. But at some point, you have to make an assessment of the risk and decide what's an acceptable amount of risk and for a given position size, and take a position, because if you try to eliminate all of the risk and continue to wait, you're more likely to just miss a move. So better to do some good calculations and come up with some parameters that fit with some trading rules for yourself, and then work inside those parameters. All right, let's move on to gold. I'm going to zoom out a little bit more. So there was some good potential back here in November for gold to have held a smaller degree fourth wave, and to get one more high in this primary degree wave 3 towards the 2100 to 2200 region. But when it couldn't hold on to that November low, we had to start giving some room to the consideration that we were in a larger primary degree wave 4 already, that had support down into the 1600s. So since then, we have been filling out as an ending diagonal for the C wave down, and are looking for more of a bounce in a fourth wave. Actually very similar to TLT, not that we're looking for any particular correlation there. The deep retrace that we were getting, is starting to break some support for holding on as a B wave inside a wider and higher flat for that fourth wave of the parentheses wave C. So the alternative is, if that low does break the 1673 region right now, this could have been all of a small fourth wave, and that could be all of a muted fifth wave to complete that move, because we are close to the 1660 is the 100% extension of the C wave, and 1648.9 is the 382, which is an ideal fib retrace level of a third. So that is a 38.2% retrace of the circle 3 itself, which is one of our guidelines for an ideal spot for a fourth wave to hold. So certainly, while we would like to see more of this fourth wave bounce and then the nominal new low close to the 1640s, a drop here could potentially complete all of that move a little bit sooner. The MVIS is an individual stock. That is something that we would cover in the Stock Waves webinar, which is tomorrow. So from the completion of our fourth wave, whether it's here a little bit sooner, but ideally from the larger 4 and then another ABC move down for a fifth, we're going to be looking for 5 waves up for an intermediate degree, that's parentheses Arabic numeral 1, in the start of that primary wave 5 in this move in gold, which should last a year or so at least, and likely, depending on the size of this move, may not be quite so big for that wave 1. Oops. Drop that down just a little bit there. But should take us closer to the 2300 to 2400 region. Sanjay, we talked about the RTY, that's the Russell Futures. So the structure there is going to be identical to that of the IWM, which is an ETF that tracks the Russell. All right, let's switch over to take a quick look at silver, and then we'll look at GDX. Silver has held on to not only the November low, but the November low actually did not make a lower low in silver than the September low. But even though it has managed to hold on to those lows relative to gold, the structure has not maintained what we wanted to see from here as the fifth wave as an ending diagonal. So I did move my fourth wave over to the November low, even though it's a nominally higher low. And I think that we're filling out, as long as the 2370 low that we just made this morning holds, then I think silver has a good chance to fill out as an alt 1-2 of an ending diagonal for the fifth wave, still heading up to the mid to high 30s for that diagonal to fill out. If that low breaks, then we're left with either very questionable 5 up into this high, what looks to me more like 3 waves up. So I have that labeled as an A wave, and this would be a larger flat consolidation, similar in line to what we were getting in gold. And that is either, I mean, technically it could still be this degree fourth wave, but it would be very, very large at that point in comparison to the size of the comparable wave 2. This is already, kind of the limits in terms of comparable size. So I would probably count this more as the A wave and the B wave if we did end up holding resistance in the 27 region as a fourth, and then coming down from there towards the 22 region as a yellow fifth wave of the C, more in line with the potential that we're looking for in gold. I mean, DXY does have a relationship to gold. I mean, the dollar does have a relationship to gold in that gold is often priced in dollar terms. But other than that, gold does move on its own. That it is not always a direct correlation to the dollar. We really try to avoid arguing for direct correlation of movement, because on any given chart you can do an overlay of 2 instruments and see periods of time where it looks like they were directly correlated, and other periods of time where they're not that they're oppositely correlated, but that they're just completely disjointed, and there's no connection to the price movement between the two at all. I think we know that things follow Elliott wave patterns, and they, the Elliott wave patterns are fractal in nature, and an impulse follows some of the same rules. So sometimes different assets can be in phase with each other, but there's really no reason to argue more strongly for correlation other than the fact that sentiment could be in phase for a period of time on 2 assets, and then just as easily fall out of phase as one completes a pattern and maybe one doesn't. So the GDX dropped to a much deeper retrace in the March low, but it did hold as our primary degree wave 2 at under the 618, closer to the 76.4% retrace. From there, we moved our primary wave 2 over. We were looking for an intermediate degree wave 2 to hold, but it did drop a little bit deeper. That's what this red stop sign was. It invalidated that smaller degree intermediate wave 2. And then we restarted the move up as the primary wave 3, but we got what looked a lot like 5 waves up into a 100%, and then have been holding this corrective retrace. So Garrett and I, on a lot of our charts for the GDX, have added this A and B and C wave, where the primary wave 3 is the primary wave 3 of a diagonal and not of an impulse. So instead of this being a fourth wave that came a little bit way too far to the side and a bit too deeper than ideal, as a B wave inside that an ABC move for the primary wave 3, it's working out beautifully. So we did hit a 382 retrace of the B. We got an initial 5 waves up off of that low. So we are trying to confirm the start of this wave one of wave one of the parentheses C wave off of that low. So 3150 is now an important support at the smaller degree. Under that, and we're probably at least going to retest this low or head deeper in that parentheses B wave, possibly even all the way down to 27, as it might drag down further. But from right here, we're working on starting the third of what should be wave one of that larger parentheses wave three up. We can look at the dollar. Hang on 1 second. Any questions on GDX before we switch over to the dollar? All right, speak now or forever hold your peace or peas. Let's go back to the TLT chart and we'll switch that to look at the dollar. Oops. There we go. That looks much better. So my concern on the dollar, I don't know if it's a concern, it might not be the worst thing in the world, is that this could have been a more significant top in March of 2020. In the shorter term, though, I think we can go ahead and get rid of this B wave here and that B wave there. In the shorter term, though, I think we're trying to bounce more in what is either a wave two or a B wave. I happen to think that a lot of times things like the dollar move more in just in this kind of back and forth ebb and flow of three-wave moves as opposed to any trending long-term impulse. So I have this called a larger degree C wave, but I think most things tend to chop around in ABC moves. If GDX does not hold 3150 at this point, then it is likely to test the 30 region and possibly extend below that towards the 27 region next. So in this initial move off the high, which I'm going to look at as for being a corrective ABC move, but I'll probably just be looking for another B wave bounce from there. I think so far we have a pretty clear ABC move up and are due for ideally, because this A wave counts best in my view as 5 waves down, we should not really get much over the 9450 region as a retrace for this B wave. But I would like to see it as a wider B. But it is certainly possible that this is all of that B wave. So I should probably bring back one of those B waves that I deleted. So we do have a pretty clear ABC structure up. We're in between the 236 retrace and the 382 retrace, which if we have 5 waves down, that is certainly more than enough for the B wave of in a zigzag. And if that's the case, the measured move could be targeting a sharper drop much quicker. And from there, it could be targeting down here closer to the 80 region. I tend to look for things to stretch out longer term. So I would like to see maybe a sharp drop that gets everybody thinking that we're plummeting in the dollar, but maybe it holds around the 90 region again, comes back up close to 94, and then heads down towards the 80 region from there. That would be my ideal. But I do think that we should at least be getting some retrace here. Maybe you could allow for this to be 1, 2, and an ABC for a third, and you could get a fourth and a fifth wave up higher. If you did get higher, closer to the 94, then I think all the more potential for this to be all of that B wave. All right, that should be just about everything that we usually cover. I'll go ahead and get this converted and uploaded for you guys, and we'll see you in a few weeks. Have a great evening.